What's going on, everybody? Welcome back for the 30 and 30. This is video number 3. Can you believe it? We're already on the third video, the third day. Congratulations for making it this far. If you are just seeing this video for the first time, make sure you check out the previous two videos. Guys, we're going to be jam-packing content out over the next 30 days. One video a day for the next 30 days to help you and I change our lives, guys. With that said, let's get into today's video. Today's video is going to be an advanced understanding on how to use Tradingview and a basic chart markup. So, real quick, while you're analyzing the market, you're going to choose a couple indicators that you may want to use. For me, I'm going to go ahead and use the RSI. Change the setting on it. If you want to change the length, all you do is hit on the settings bar, go up to whatever length you choose. I'm going to choose 10. Just make sure if you want to change the style, different colors, more power to you. You're more than welcome to change it. I have it on 80 and 20, so that way the market's extremely overbought or extremely oversold at those levels. And then I have, of course, the 50, which is going to be the middle in a downtrend. Basic understanding in a downtrend, when the RSI comes back to the 50, you're going to be looking for potential sells. In an uptrend, when the RSI comes back to the 50, you could potentially be looking for buys. If you have other confirmations and confluences to confirm and take the trade, you'll obviously going to want to take that trade. So here, just looking at this coin, Dogecoin, we're coming up to the 5-minute RSI, the 50. And when I look here, do I see that we're at a rejection area? We are actually at a potential rejection area. So we could see a reaction here, but we've already received that reaction one time. The RSI failed to hit the 50. So because we're at the 50 and price already retested this breakdown, we could see another rejection, or we could see price pull up to the top Bollinger Band. This would be like a low risk entry. If you took it, it would be like a low risk 3-minute sell. If you're trading binary options, you would enter a 3-minute sell, very low risk, because we already see that it reacted if you were trying to take a trade if this was a downtrend. But another thing that can help us as traders is when we see setups that are occurring. So we can recognize this as a potential double bottom. Not only do we not see it as a double bottom, but what is RSI? The RSI is telling a story. For those that are more advanced will understand this and see this right away. RSI is creating higher lows. Price action created equal lows. RSI created higher low here. We have a bullish divergence. We could see price start to pull and push up. So with that said, we'll keep our eyes out for Dogecoin, look for possible buys. If it does come back down here and respect the divergence, great. We'll look for another buy down here, but if not, for the most part, I'll be looking for a nice sell somewhere in this region up top, maybe. Depending on if the RSI, Bollinger Band price action, how we're looking, we could be looking for sells when price comes up in this area. Now, first thing you're going to want to do when you start charting is you're going to want to determine what time frame you want to mark your chart ups. For me, I'm going to hide the Bollinger Band at this moment. For me, if I'm taking a Forex trade and I'm looking for a longer term trade, I'm going to go to potentially the daily time frame. And at the daily time frame, I'm going to look for key areas. These key areas are going to be known as support and resistance areas. When I notice that we have a price push up to an area and it gets rejected, as we see here, price pushes up and gets rejected, as we see here, we have a significant resistance area, right, in this area. Now, if we were to take a look and see our next area, we'd be looking for a support area or a support turned resistance area, which when we look at this area here, we see that it wicked it, found support here, price broke, retested, and then dropped, and then respected it all the way. Price stayed below this area all the way to here, came back up, fought this resistance up top over here, and came back. Now the unique thing, as this dropped back in on the daily, we see that price isn't pulling down just yet and creating a new low. Nope. We're actually creating equal lows here, just like the RSI is showing. RSI is showing equal lows, price action showing equal lows on the daily, and then the RSI started pushing up, price action started pushing up. So it's very interesting. Um, it's at a very interesting area right now. This would have been a great area to buy. You know, the RSI was just in an uptrend. RSI came back to the 50 area. You could have been looking for buys here, and you would have been in profit. Now that's just one theory. You know, following a trend trading. Um, so, but when you're marking up your charts, you want to focus on the simplicity of just certain areas. You know, if you need to change the color to determine, you know, maybe you want this one to be blue for your support. Maybe you want this one to be purple for your support turned resistance or resistance turned support. And maybe you want this for your resistance. Let's go to the 1 minute real quick. I just want to see. And if you take a look at that, guys, Dodge did reject that area. Interesting. Ethereum, same thing. Reject that area. Started dropping. Interesting. So we did our, if we were trading Forex, we would do our analysis top down, starting at the daily, then we'd work down to the hour, and then do the same thing, right? We know this is a daily resistance area. Now let's find our hour support and resistance areas, right? We know that this area here is going to act as a support when price comes back down. How do we know this? It acted as a resistance here and acted as a resistance all throughout this area. So this would be a good hour area. Let's see if we have another area. We have this area here where prices reacted from, right in this area here. This would be a support. You could have another support area here. So if your support areas are going to be blue, you want to make sure you have the right color. You know, if you're going to color coordinate it, I put my resistance as red. This is how I relate to my chart while I'm analyzing it. This is how I relate to my chart while I'm analyzing it. So here we have price came up to the resistance area and then worked its way down. Now, if I would have seen this, if I would have seen price pushing back up to this rejection area and seen other additional confirmations to sell, like I see here, right? Price action created equal highs, divergence is in play, price dropped from the second touch. Well, technically, it would have been the third touch if you. Anyway, it doesn't matter how many touches it touches, but dropped. So just by understanding where the market or where price action could move to in the market and move away from in the market could help you determine your potential buying areas in the market and selling areas in the market. So we have this area. This would be like our zone, right? Then this would be our next zone. Now, what do you call price action that stays in a zone for an extended time, like we see here? We call this consolidation. Now, during consolidating markets, you may have some opportunities that present itself that normally wouldn't. So you could, in a consolidating market, find the low points to look for potential buys, and you could look for the high points to look for potential sells. Now, when I say high points, if price action breaks and creates a new low, then our new lower high points would be the previous low, right? So this was our previous low here, price broke it, and now we have a new low. Now, you have a few ways a market moves, okay? The market moves up, the market moves down, and the market consolidates. So you have a upward movement where price goes in a upward direction. right? When we zoom out, we can see that price has been in a uptrend, right? So the current trend would be up. The current primary trend is up. Now, when it comes to trends, you have a primary trend and then you can have a secondary trend. What do I mean by that? That's a great question. I'm going to share with you, show that to you right now and share that with you. So we can see price here is in a uptrend. This would be our primary trend up. However, when we zoom into price action occurring now, we can actually see that price is starting to potentially trend down. So now we're looking for additional confirmations for either A, buying areas or selling areas, because we can sell off the secondary trend or buy off the primary trend. Now, knowing that we have a secondary trend looking for sells in place, we would want to be looking for structural breaks of our support areas or our zones. So we could see here we had a 15-minute, so right here, 15-minute support area. That's now been broke, and when price comes back up, what do you think is going to happen potentially? If you said reject or resist, you are more than likely correct and are going to do very good at this trading thing we call binary options trading and trading in general. But so what will happen is price took out these lows, created a lower low, price will come back up and retest this usually, and then we will start seeing a rejection. Now, if you're analyzing it on a 15-minute time frame, how can you get the best potential entry? Well, you can go down to the 5-minute time frame, and what you could do is when price pulls up into this area that we see here, that we're waiting for here, that we're waiting for right here, when price pulls back up into this area, we could wait, we can wait until we get confirmation that price is in starting to reject. So what does that confirmation look like? It could be a doji candle, which a doji candle is something like, this, maybe with a line here, or this with a line here, or this and a line here, right? There's all sorts of types of dojis, okay? Or just get rid of this real quick. Or we could see a engulfing. If it's bearish, we're going to see a bearish engulfing, right? Bearish engulfing. Or if it's bullish, we could see, I didn't want to do that. We could see a bullish engulfing candle. Okay. So, bearish engulfing candle, bullish engulfing candle. Now let's take a look at what that looks like on a candle. Bearish engulfing right here. This bearish candle is engulfing this candle. Here's another good example. This is a bearish engulfing candle. These are dojis. This is wick rejection. We're seeing a wick rejection followed by a doji, followed by a doji. Bam! Bearish engulfing candle. That was your confirmation. 1 rejection, 2 rejection, 3 rejection, say no more. We got a bearish engulfing candle and we took the trade and we dropped it like it was hot, ladies and gentlemen. and we caught the bag. Now, if you caught the bag trading binary options, you only need to take a 5 minute trade, three to 5 minutes. Your only interest is, in that trading opportunity. But you could take a Forex trade, depending on what time frame you're analyzing the market at, and potentially profit. Now, I'm going to share with you guys some techniques and trading styles that I use for trading the binary options market, but we're not going to get into that until maybe halfway through, or maybe that'll be your Christmas video, huh? What would you guys say if I give you a nice Christmas video on December 25th, 2022, 24 days from now? I'm going to be creating you guys a fabulous Christmas video with some amazing content that's just going to, you might have to watch it 4 or 5 times because you're gonna love it. I just know you are, because if somebody would give it to me free, what I'm about to give to y'all for free, I can only imagine where I would be. But I have no resentment. I have no guilt. I've gone through everything for purpose, on purpose, and with purpose. Um, but yeah, guys. So that's that. Just a little basic chart markup, understanding Tradingview, um, showing you where you could find your lines, your vertical lines. Now, say you want to draw a channel. Say you're like, you want to see a price in a channel. You could do channels, right? Price is channeling within here. Is this correct? Is it? It's pretty accurate, right? We get it. We could out touch wick, right. So because of this, you can have an anticipation of where prices may come. If we follow this move, well, price could come up here, work down here, and so on and so forth. But as long as it's following this channel, it doesn't matter. You can participate in the movement within this channel. Okay? Okay? So, that's a little hack, right? If you can catch a channel in time, before like the fifth. If you can catch, yeah, if you can catch the move, catch the move before, like, I would say, anywhere from, I said 5, but in reality it's on in a channel I would say 6 to 8, because you're gonna get one touch, two touch, you're gonna get a touch here. That's 3, 4, 5, 6. This would have been a 7th touch. So you're buying off the 7th touch, you're selling off the 6th, and then you just want to get careful, and then if it continues, then wait for a significant break of structure. So for example, like if this area here, which is crazy because if you guys seen how I did that channel, I had no clue that this area was going to be a resistance area. I was just, wow, that's amazing. But anyway, we see we have consolidating and then move up. So once we break this area, we had a impulse of a move. So same thing comes with this side. If price consolidates and then breaks to the downside, where you can anticipate an impulse move to the downside. When price breaks out of the channel, you're going to want to wait for a retest of that channel, because a lot of times what happens is price will break and then re-break back in. So you want to see the break, no break back in. You want to see start some like wick rejection. Same thing as a resistance up top. It doesn't matter the resistance. If it's a resistance, you're looking for rejection, bearish engulfing, doji candles, and so on and so forth. If it's a vice versa, if it's flipped, then you're looking for bullish engulfing and bullish confirmations, or bearish confirmations and bearish engulfings with bearish dojis if it's bearish, or bullish dojis and bullish confirmations for bullish. But with that said, guys, that's gonna do it for video number 3. Let's go. This is a ride, guys. We are gonna crush this. We're gonna give so much value. You guys are gonna get lost in the sauce. 30 and 30 will continue. Be on the lookout for day 4, guys. We're gonna get in depth on some indicators that I'm personally using. I recommend that you can add to your chart while you're charting, and have these indicators mastered as tools in your arsenal and your complete toolbox, guys, because as traders, we're like carpenters. Carpenters have multiple tools in their toolbox. Painters have multiple paintbrushes. Bowlers have multiple balls. Traders have to have multiple indicators, multiple strategies, multiple ways of doing things to get a good outcome, because sometimes your market conditions are going to be trending. Your primary, you're going to see you're having a primary uptrend with a nice secondary downtrend, or vice versa. You're going to see that you're in a downtrend and you're just in a downtrend overall. It's just a drop, massive drop, or vice versa. You could be in a massive to the upside. But yeah, guys, greatly appreciate you for hanging out and taking the time to watch these videos. Would you do me a favor and support these videos by liking the video, hitting the subscribe button, and hit that bell so you get notified on my next video, guys. 30 and 30 will continue tomorrow. I'll see you guys tomorrow. Everyone have a good night. Bye for now.